Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody's had a great couple of days. We had our live DMC on Wednesday. Yesterday was our live trade room. And so we are back on a Friday, ready to roll, happy as can be. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. There's a little thumbs up thing down there. Just go push that. All right. Real quick, so some of the lines you're going to see on today's charts are actually from Wednesday. Yesterday, I didn't do the live trade room. It was done by Justin Krebs. For those of you that are Traders Army members, hopefully you enjoyed having Justin in the room yesterday. So I actually went back and left in all my lines from Wednesday. So what's interesting is you're going to see some levels that have been broken through, or some levels maybe that have changed. But I thought, one of the rules that we have here on the DMC is that we leave the lines on the charts so that you can see how trades played out. So, which is an interesting case because, when we see, like, for example, the ES, we're going to see a level that got blown through, but it's interesting to see how the level plays out after it gets blown through. So I want to kind of show you that and get you up to speed on kind of how that works. So let's go ahead and get rolling. So on the ES, we had a really nice trade off of our supply level on Wednesday. So our Wednesday live trade room, we talked about this supply level as we got a little hit out of this zone, and price then came back down out of that level. Now, what it didn't come to was on Wednesday, we talked about this little 15-minute area for a potential reversal. The market did not come all the way into that zone to get us an entry. And while that zone is still valid, look at the next time we came up into this level. Well, it switches this to a confirmation on the long, or on the short, excuse me. And then the second time we came in, we actually popped through it before you got a confirmation entry. Now, interestingly enough, that area of supply turned into an area of demand, and it held for a demand level again yesterday. Well, I guess it would be in the overnight, from 33.63 all the way up to 33.81. So you got a pretty nice move out of this. This is the flip between supply and demand, and understanding how old demand will oftentimes become new supply, old supply will often become new demand. Probably more commonly heard as old resistance becomes new support, and old support becomes new resistance. Well, remember that exists because not because there's any orders left over from the origin of this move. A lot of people talk so much about the origin of the move and the orders that are left behind, unfilled orders. Well, yes, those unfilled orders matter, but once we break through the level, then those unfilled orders are completely gone. And how do I account for those in the future? Well, I've got to be able to look at what I call groupthink. And the groupthink is where are the orders going to be put in, right, after price has broken through a level. And that's really ultimately what the fair price value areas are all about. So we did get a really nice move off of that zone. The second time it touched that level, we came a bit below it, so you may or may not have gotten stopped out. It only went below it by a few points. It got another move away. Now, this area is become a bit of a price magnet area. And so I wouldn't be surprised if we reverse off of this right now and head down, heading into today. I'm a little bit more bearish than I am bullish today, based upon that. But I'm not going to use that level again. I'm going to come up here to what I think is a better area, right here at the European market open. Now, your stop still has to go above this wick, right? It's still got to go above the candle, the leg in, the highest wick of the leg in candle into the base, on that smallest time frame. And so, but I think that 33.70 is a pretty good potential entry for a short, for a reversal. And we may be able to see that one today. If you're trading SPX 1-day options, I think if you can look above 33.80 for a decent little resistance point, because this now becomes a potential for a breakout, right? So what I may look to do today is sell SPX options at like 33.80, 33.85, somewhere up in that range, and then also have a long breakout in place, right? So if I lose a little on the SPX 1-day options trade because I get my long breakout, because we get basing in front of the level, I'm okay with that. And I'll take the small loss on the options trade in order for the potential of a big winner on the breakout trade. Or if I sell the 33.85 and we never come up to that area, my breakout never triggers, and I just have that 1-day options position expire worthless. So just think about that today when you're looking at the SPX, for those of you that trade the 1-day options position. If I look at the Nasdaq, so in the Nasdaq the other day when we were doing our Wednesday morning session, we had talked about, some of you were looking at a little breakdown below here, and I thought we may get a little rollover and a little reversal here. And we did get a little rollover and a little reversal. It was certainly not big, because the market then immediately reversed and came smoking right up, and it blew right through my supply level. I mean, it just cut through that like a knife through butter, and it just totally failed. So why are the lines still on the charts? Remember, I told you I was going to leave a couple of them on there. But I want to see, I wonder if we come back to here, if this is going to serve as demand. I'm going to remove it for now, but I think that there could be some demand here at this area that's a bit of a wick over wick, where we could see a bit of a reversal, price coming up into here. Now, on our 15-minute supply up in here, price did come up into this level. We got a little bit of a move away from that zone, and then price popped right through. So now the question is, I'm going to remove this level. What do I do with our potential resistance up above me? Well, we're sitting at an all-time high, right? We're sitting right near an all-time high, and frankly, this is a bit of an inverted head and shoulders at an all-time high. So if we get basing in front of here, that to me is a really nice potential on the breakout. Our momentum is definitely a bit slower than it has been. And it's funny because all I'm seeing, all over good old Twitter, there are so many people out there that are saying, this market is about to roll over, it's about to fall, get ready to get short. Man, those perma bears are just getting their butts kicked, because the market is going to tell me to go short when I get lower swing lows and lower swing highs on bigger picture time frames. And on my 4-hour, the Nasdaq gave us a couple of days of that, and we got a couple of nice shorts in there. But now we've put in a slightly higher high, right? And if my demand levels can lead me to new higher highs, then we continue to be buyers. And that's what we saw happen with our small stop out. I'm okay with taking a small stop out because we made some pretty good trades on the way down. I'm okay with taking a small stop out when our trend decides to shift directions on us. So now I'm going to look up here for the potential on the breakout. All right, in the Russell, the Russell, which had been our strongest market, is showing a little bit of weakness here, dropping down a little bit more in the overnight. It fell a lot more. Now, we came really close to our 15-minute entry, and we were unable to get a quality fill. So this needs to switch to a confirmation entry. I did not have a set it and forget it trade up, so frankly, I would have been asleep anyway. But now I'm gonna leave it in here and allow for if we drop back into here. I'm gonna wrap my lines around this area right up in here as a pretty clean reversal point if price makes it up to that region. My guess is that's going to be a pretty decent retracement amount of a Fibonacci number if I just pull the fib from here to here. There we go. That's sitting right at the 61.8 retracement, which I figured that would be the number. I mean, it's dead nuts in the middle of a 61.8 retracement. We do, though, have a 38.2 retracement right here at 1571 and a 50% retracement at 1574. Both of those could be areas where you see the market give a bit of a reversal. Very common to see reversals like that, and that would be the bear rally short setup. I talk a lot about the bear rally short setup. The bear rally short setup looks like this: bear rally and then short, right? Bear, rally, and then short, right? And ultimately, that's impulse move down, corrective move up. Impulse move down, corrective move up. And I think that could be what we've got to set up for here. A pullback to a 61.8% retracement would be a reason to get in. But if we don't get the full 61.8 retracement, you could even theoretically go candle to candle short at about the 50% retracement of this speed candle, these three speed candles right in a row. All right, moving to our commodity markets, starting with crude oil. So in our crude oil levels, we have been trading a bit sideways in here. We had a pretty decent area set up a couple of days ago. Price did not come back to that level. Our 15-minute level that we identified on Wednesday, price actually hit that in the Globex session, and we've gotten a nice little rally off of that zone. For those of you that were awake to take it here the last couple hours, maybe you're one of our UK or Vietnam or Australian members. If you're awake and your head's off the pillow and you took the long, then I think now's an opportunity to take your stop and move it up at the very least to break even. So you've locked in a free trade. You've already moved 40 ticks off of the level from 4180 to 4220. Your target, in my mind, is going to be right here at about 4230. So you're just about to your next target, which is the opposing area. Remember, if I'm buying at a demand zone, I need to look for the next opposing supply zone as my target and get in and take that target just before that next opposing zone. Right? My target is just before the next opposing area of supply if I'm buying at an area of demand. So that move away is continuing to run. Looking at gold, so in our gold position, we've got a couple of different areas here in gold to look at. Now, gold on a 4-hour chart, we did see a pretty nice sell-off and a pretty nice pullback. Matter of fact, of that amount since that pullback, we've had about a 23.6 retracement, and we're starting to roll off of there. I don't know that that's for certain a 23.6, but my eyes are telling me it's about 23.6 where we peaked. A little higher than 23.6, so right between 23.6 and 38.2. But we've started to roll over from there. Now, I still have a supply level up above me on the hourly chart that is still valid. It's a bit of a wick over wick area, but we've come close enough to it for me to say that if you want to take it, it's got to go confirmation. It's not quite, what I would consider close to the level, but it, being 7 points away, but close enough that I'm going to be concerned with it. And then we had looked at a potential breakdown below here if we get quality basing. We did not yet get quality basing to give us a possible entry on this 1922. All right, bonds and currencies right quick. Remember, a lot of these are levels from Wednesday. And some of them, frankly, we're not changing anything. Now, in this little ZN trade, we did get a little move away out of this area. 1, 2, 3, 4, 5, 6 candles later, price hadn't really moved anywhere. So we're probably out at break even right here. And then 6 more candles later of sideways price action, and then that son of a gun really came down. So now, if you didn't follow the 6 candle rule and you stayed in the trade, your stop probably is above this wick right here. You may have gotten stopped out, and that's why we have that 6 candle rule in place. It's always frustrating when it starts to head back down right after there, but we are seeing that weakness in the bond markets overall. So I think that we may continue to see a little bit of that. If I look at this on a 4-hour chart, that's after having a really nice steady climb, we're getting a nice steady pullback. And if I do this on a daily, we can see that we finally broke out of this trend of just red and green every other day. I mean, this looked like a freaking Christmas candy. It was just red, green, red, green, red, green, red, green, red, green, just back and forth. And then look at the daily, right? Red, green, red, green, red, green, red, green, red, green. I mean, it's just every other day up and down. Before we've had 1, 2, 3, 4, 5 red days in a row. And yesterday, if I look at the daily chart, we really tried to get back up, and the sellers knocked it down and said, in the words of the 1990s sitcom, "Not the mama," as price came back down pretty well off of that level. So we're seeing a bit of a reversal potential right in here. So today we've got a little bit of a candle to candle. I think that's already started a bit of a rollover. And so at this point, you might want to look for a potential breakdown if we get basing right in here. In the Aussie, we have a breakdown level here at this 7111 area. We've not really done much inside of the Aussie position, so we're just going to be patient and wait to see if price comes back into here to give us a bit of a breakdown. There is some demand down here, and really even on a 4-hour chart, that could be another place that price could fall through. that demand is a retest of this area here to the left. And so I feel like if we get quality basing in front of here, then that demand won't be much of a break to stop us from trading down through it. Same thing in the euro. We had taken a look at, I think Justin had put a euro trade in, for those of you that took the euro trade in our trade worksheet and yesterday's live trade room, that worked for a really nice move. And now we're seeing that it's on a bigger picture, it's gone basically nowhere. So I don't know that I would really want to force a bunch of things today, especially coming in on a Friday. If I'm not in a trade on a Friday afternoon, I'm not going to usually execute one after about 12 o'clock Central Time. It just doesn't seem to be, an effective trading time of the day after about 12 on Friday. I know I've made the mistake in the past of looking for a little day trade towards the end of the day on Friday, and it's just not been an effective position. And that may be what we see comes up today in some of these currency markets. In our Canadian dollar, now the Canadian dollar, we got a little bit of basing right in here after the breakout, right? So it broke out, and then it based, and then we got the continued move. So you may or may not have gotten in on that area. If you did or did not, irrelevant. I still think that there's an opportunity now at this area here for a potential on the retest. Our supply level up above here, once again, has to be a confirmation because we're in an upward trend, and we came close to it and weren't able to get filled. Great British Pound. So in our Great British Pound position, we had this little 15-minute zone in here from Wednesday. It was this teeny tiny little wick over wick area that we had spoken of. Price came up into there and whoop, popped right through. So that just didn't give us a much of a reversal off of that level at all. And so now when I look at what do we have on our 4 hour, we are definitely giving some pinch in here, but we're in a sideways price action. That tells me I'm not going to force a trade. I'm going to wait for an hourly level of demand or supply before I would find a reversal. And then in our Japanese yen, we took a look yesterday or the other day at the fact that the Japanese yen had broken through our little 15-minute demand, and then this became a decent little area of supply where we saw price move off of that level. I think that we may still see price move off of that level again, although putting in a little bit of a rounded double bottom here where sometimes you see price actually come up from that region. So what I'm going to do is wrap my lines around the speed candle, and we typically anticipate speed candles to get retraced. And if it does, that would be a decent place for price to get. I'm going to tighten this up a little bit. 94, 338 by 94, 434. Tighten that area up. Might we break above here? I think we could. Bit of a double bottom pattern that has formed here, and it's a nice rounded double bottom. So when I look at that, oftentimes that is a sign that price is going to break out up. I would need some basing in order to get me an entrance into that position. So as far as today goes, remember that it is Friday, and any time that we have a Friday, we have to be concerned with the fact that Friday afternoons, you may get a run one way or the other that may eat up the profits you made all day, or it may make your profits that much bigger. So what I would say is towards the end of the day, manage your stops. Manage your stops a lot more tightly as we get closer to the close. And if you're going to hold a position over the weekend, understand that it's best to hold utilizing options on futures as a way to hedge your exposure and your risk. So I will see you Sunday night. Traders Army members, join us for Sunday night's live trade room. If you're not a Traders Army member, go to tradersarmy.com today. Use a promo code TRADER60 to see what we do on Sunday nights. I will tell you, Sunday nights are typically our most successful trade room of the week because we're taking a look at the market before the world is, and it gives you a much, much, much better opportunity. So just looking forward to seeing some of you all there as new members on Sunday. I'll talk to you guys soon. Have a great day.